Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have an amazing guest for you today. He's a technology evangelist. He's an industry thought leader. He's been published numerous times. He continues to give himself to the industry by sharing his knowledge and insights. He's an AI expert. Please help me welcome back to the show, Tim Nguyen, CEO and co-founder of BeSmartee. Tim, welcome back.
Hey, Michael, thanks for having me back.
Yeah,
Appreciate it.
well, it is great to have you. Last time we spoke, we were at ICE Experience. We talked about the launch of all of your Bright product offerings and the traction they were getting. So congratulations on that front. I'm sure I'll have some questions for you in a sec on that. But now that you've been to a number of conferences, you've talked to a lot of lenders, where do you think they're most focused on in their business right now this year?
Yeah, so ICE was really good. One of the best shows of the year. First, I'll start off by saying that
Oh.
the lenders' buying appetite right now. Last year it was you're crazy to try to sell me something. This year is more like, okay, so far this year it's been, all right, I know I got to do something. I know rates will go down. We just don't know when it's going to go down. I need to get prepared, so I'm starting to research. I'm starting to ask buying questions again, but I'm just not quite ready yet to pull the trigger. But I really want to. It's just this big unknown with interest rates. Obviously, 30 days ago, the outlook on rates was very different than the last couple of days here with the CPI coming out yesterday, yesterday, and the new wholesale CPI that came out today. We're at the highest rates I think since February, so it's that is the topic, right? When does this market stabilize? When does that market turn? That really continues and remains to be the biggest. We still see acquisitions, mergers, you name it. So there's still a lot of rockiness in the industry, and that's keeping people up. It's making it difficult for people to manage their business in the long run because this short run period is just rocky, and it is what it is.
Great insights, and thank you for that update. I think you framed that exceptionally well. So as you're talking to these lenders and they're starting to know, I need to do something, what are some of the technology, what are some of the solutions, or what are some of the pain points they're trying to solve, maybe not pull the trigger on yet, but they know they need to eventually address?
Yeah, it really breaks down to two. There's top of the funnel. Where am I going to find the most profitable, high quality, highest converting opportunities out there in the marketplace? Competition is difficult, right? We're still overemployed in the mortgage space based on volume. We look at purely based on that metric. So there's a lot of people fighting for this, small amount of deals. So top of the funnel technologies. Now also kind of coupled with that, right? It's the operational excellence, operational execution. How do they lower their OpEx at the end of the day? It's really what it's amounting to. So we play on that top side of the funnel. We see some of our competitors, raising prices in a down market. We're actually going the opposite way. Those are opportunities that are coming to us. So people are looking to cut costs, whether it's top of the funnel or internally. On the internal side, AI is obviously a hot topic. Automation is a hot topic, right? How am I going to close more loans with the same amount people have today as the market stabilizes, the market gets a little bit better for us? And it's basic fundamentals. How do I bring more revenue, and how do I make sure I keep most of that revenue? And right now, it's really split. It really depends, right? So this morning, I just talked to a captive mortgage company owned by a big builder. They got all the leads they want. And it's not a top of the funnel issue, right? But how do I process them more effectively? How do I reduce my top of the funnel technologies? How do I carry that data downstream, automate it? How do I start applying AI to my processes? Not that it's going to be a magic bullet to solve everything,
Right.
but people are starting to talk about that way, right? And I love this conversation because we're talking about business fundamentals. We're not talking about mortgage fundamentals.
Right.
Sometimes as business leaders, we confuse ourselves that we think we're just business exec or mortgage executives, but we're business executives first and foremost. We serve the mortgage industry, and I'm starting to hear more just business fundamental conversations, OpEx reduction, right? Those type of fundamental KPIs that all businesses deal with in this environment, not just the mortgage space.
I love it. And you have such a great perspective. I know you're involved in other verticals. You are really involved in understanding the business needs first and foremost. And I think that's why you can provide such great insights. You mentioned AI, and There's a ton of buzz about AI, but where do you see certain aspects of AI gaining traction and things that lenders can incorporate? Where do you see that AI is still somewhat of that pipe dream? People haven't quite figured out how to use it for this or that aspect. Talk to me a little bit more about where AI is making an impact now in the mortgage industry if people are implementing it, and where is it still a little bit off?
Yeah, I have four companies that I basically run, support, etc. And you're right, they're across different verticals. A couple of them are in mortgage, and one of them is a company called Bob AI. So with Bob, and it's no different than the other investments and opportunities I'm working with outside of mortgage. AI is really people. The problem with AI is you have these. People believe or are being sold on the fact that it can do more than it can, right? And we're trying for it to solve the world's problem, and it's just not going to do it yet. I think we'll get there, right? My best recommendation to clients right now is, Bob AI, for example, right? It's a very specific use case in mortgage. It's reducing cost of help desk costs, underwriting support desk costs, processing support desk costs. How do we reduce the amount of labor required to answer questions and gain insight into the data you already have? You're spending a lot of money on every month. How do we make that more effective so we can better serve the clients, the end users? How do we make that more effective so we can actually move those bodies to different areas of the business where they can be more effective for the organization, right? So my best recommendation is don't look too broadly. Find very specific use cases in AI. For Bob, it's help desk. For others, it could be, how do I price out loans better? How do I reduce compliance risk? Find very specific niches. And I would avoid the ones that are trying to solve and boil the ocean. It's just too early. It's not going to happen yet. The AI brains are still being developed. They're good. They're going to get a lot better. The training and maintenance of your proprietary data is difficult at best right now. And then once you have all that, you have to deliver it into the niches, into the nooks and crannies where you can use it and unlock value and save on X, Y, and Z. So that would be my best recommendation, Michael, with AI is use it for very particular workflows and use cases. Start adopting it fairly quickly so you can start learning about it. Just don't expect it to solve 20 things. Find the one or two things that can solve really well.
Tim, I love that. And that's some of the best AI advice that I have heard because people are buying into all of the hype. They're trying to solve the most complex issues in their organization and think it's kind of like the magic button. And to your point, the models are still learning the proprietary data and feeding those models. And I love your point of just go for the niche, get some of the wins where you can get the wins, where there is the case studies where you can prove the win there, and start learning AI. AI is not going to go away. I think we both agree AI is going to continue to get better. So you can't just put your head in the sand, but don't also think that it's the magic button to solve everything going on in your organization.
Exactly. Yep.
Great tips. So what are some of the other things you see, as you look as a business owner, what are some of the things that you see going through the rest of this year into early next year? What are the technologies that people should be, investing in? What are some of the technologies or how can they best vet them? Because I think that's one of the areas people struggle. They hear about AI, but they don't really know how to vet it. They hear about blockchain or they hear about another technology, but they're really not sure how to vet it compared to their needs and what they're trying to solve for.
Yeah, I would categorize technology spend in two buckets. The first bucket is absolutely, again, OpEx reduction or OpEx control. We cannot let the industry get back to a feast or famine mentality. We'll make a lot of money when things are good, and we'll lose a lot of money when things are bad. It's just a difficult type of model to run. You got to even out your OpEx, right? If volume grows and your OpEx and your cost generally grows in a straight line, You will do better because more loans, more margin, but you're not. We're singing the same old song again.
Right.
So we got to fundamentally find out how can we go from 2.5 underwrites per underwriter, right? Just using that pick on that one right now. How do we go to 4? That's the thing you got to solve. Because if you can't solve it, when you're doing 400 loans a month now, you're going to do 1,200 loans a month in 2 years. You got the same cost structure.
Right.
Not getting any better. You got to
Nope.
find a way to use technology to scale. At the end of the day, if your technology is not helping you scale and reduce costs, don't spend the money on the technology. That's plain and simple. Find a way to do it. Now, the second cohort, the way I would divide that is re-engagement, client retention,
Okay.
right? The whole, I think you know this number, right? 18% of borrowers will go back to the original lender that they worked with to get their original loan.
Isn't that
That's
sad?
horrible.
I mean, that's
If you were
horrible.
a restaurant, you'd be out of business.
Right.
A retail store or a gas station, you would be out of business. You had to spend the full amount of money, 82% of the time for the same revenue. You just can't sustain, and that's the pattern we're in, right? So you got to stabilize your OpEx so it can actually scale, right? So if your revenue's going this way, your OpEx can't be going that way. It has to be kind of, it's going to go up, but it can't go up the same rate. That
Correct.
chasm, right? That gap has to grow. That's first. Number 2, find a way to re-engage. Because if you can find ways to re-engage your borrowers and bring them back to your brand, then you can reduce that cost of acquisition. That will make a difference.
Love it. Great insights. That's why I love having these conversations with you. What are some of the other things that you think are going to take place as we look to, the rest of this year, next year? What are some of the things BeSmartee and some of your other companies are rolling out? Where can you guys provide the greatest lift and the greatest help for lenders in the marketplace?
So surprisingly, we actually attacked both of those buckets I just shared. We basically took the best of BeSmartee and the best of some of our competitors, put it all on one platform, and I cut their price in half. So that can give you the same tools, and reduce your OpEx immediately. You're not going to take a step back. We're going to reduce your cost. And because of our new subscription-based pricing model, it's going to scale with you, but it's not going to scale one-to-one, right? You're going to get the reap the rewards of scale. So that's what we're doing to help with bucket number 1. Other vendors are doing things to help with bucket number 1, but that's what we're doing. The second bucket where we talked about re-engagement, that's something we're starting to design, right? That is what I call the customer for life strategy. How do we get that 18% number that we talked about to 22, and then to 28, and then to 35, right? And I harp on this every single time, but at the end of the day, borrowers have a trusted advisor network, whether they call them that or not. Sometimes it's mom and dad. Sometimes it's a successful uncle or brother, right? Sometimes it's their real estate agent, their banker, their life insurance agent, their homeowner's insurance agent. But how many people would claim that their loan officer is part of that trusted advisor network that they go to when they need help in their financial?
Far less than the 18%, right?
They don't, right? They look at it as a transaction.
Yep.
And that's what, a customer for life strategy will solve for. And if you do that, right, it takes a mentality shift, right? I'm not just going to help you get into a home. I'm going to help you get into a home and be the best homeowner you can be. You'll never have to worry about things. I was talking to someone this morning. She came from 20 years in the mortgage space. There's something that escrow reimbursements do, where like it will re-amortize.
Okay.
The homeowner had no idea. Lender never told them, but she being in the industry is like, hey, hold on, don't spend that reimbursement because here's what's going to happen, right? And sure enough, it did. And that friend thanked her to death because otherwise she would have spent that money and she would have been like, wait, and she would have got stuck, right? So we just simply got to really kind of look beyond the closing of the loan and look at the life and journey of a homeowner. We're all homeowners. Let's pass on this experience to them. Let's help our neighbors just be better homeowners.
Well, and I love it. So critical to switch from transaction mindset to building that relationship and really understanding that customer for life. One of the other terms you mentioned, and you and I have talked about this before, but I want to make sure our listeners understand, How can you explain for the person who really hasn't experienced this before subscription pricing in the mortgage industry and in mortgage technology compared to how things are typically priced? Because I think that's a huge distinction and a great competitive advantage you have.
Yeah, before I answer that, can I just go back to the last one real fast? Do you mind?
Sure.
I just want to add something real fast because a lot of lenders will have like a repeat customer incentive for the customer, and that typically means they're going to save a little bit of money, right, on price. But that also means that the originators will kind of lose a little bit as well, right, of their compensation for this easy repeat customer because the corporate's going to take a hit, so you have to take a hit. But I'd say, look, just challenge yourself. The incentive in that scenario is not in alignment with your company's objective to bring repeat customers back, right? In fact, like if you want to take a hit, fine, that's a corporate, right?
Right.
But incentivize your people to bring those customers back and give them the reason to. No, don't penalize them. All incentives have to be in alignment with the ultimate end goal. Now, going back to the question that you just mentioned with, I'm
Subscription
sorry,
pricing.
subscription-based pricing.
Yep.
So if you look across the technology space, not mortgage technology, but just all technology, we're so used to it. It's a subscription-based pricing, right? Whether it's Netflix or, oh gosh, I'm struggling to think of
Like
something here.
Microsoft 365 or
DocuSign is all
yep.
subscription-based pricing. What subscription-based pricing does is it allows you to gain the benefit of scale across hundreds and thousands of customers that vendor services. Ultimately, right, subscription-based pricing means you're going to buy a certain allotment of transactions for the year.
Yep.
And you're going to get plenty that, you're going to use. And it's going to be at a much better price point. But you're not going to get dinged dramatically if you go over. So what we do specifically with, BeSmartee, for example, is if someone comes to me and they say, hey, I'm going to close 1,200 loans. That's my plan. Okay, great. What do you think your miss is going to be? What number do you miss that you get fired? And they might say, 900. So we will price it out at 900, but we'll give you the 1,200. And the reason why we do that is I want to give you downside protection.
Yep.
Right? I'm going to charge you based on your miss. But if you do hit your plan, you're not paying me more. It's all included. Now, if you crush it and you do 1,400, we will have a little upside on that 200, loan delta because we want to win with you, right, as a customer. But I'm not going to penalize you for it. I'm not going to take a big chunk of it for it, right? And that's what subscription-based pricing is all about. You look at DocuSign, for example, it's the same thing. Right? Yep. I think I'm going to do 5,000 signatures this year. Cool, the chart. But they're going to give me a little bit more and I'm going to pay for it, right? I'm going to pay for the 5, but I'm going to get a little bit more. And that way I don't have to worry about overages. I don't have to worry about, if I need it, oh gosh, maybe I should avoid the platform, right? I don't want to do that. So that's what subscription-based pricing is all about.
I love it. And it was so clear of how you've described it. And I think more and more lenders need to understand that's really where they need to get to for their mortgage technology. Yeah. And they need to be asking other vendors for that.
Yeah. I mean, here's what I would say is, a lot of lenders are proud of the fact that they have, hey, you get paid when I get paid. In theory, that makes sense. But if you look at it from the vendor's perspective, what happens? Well, if I get paid when you get paid, I'm going to need to get paid a little bit more.
Right.
So as you crush it, I'm going to love it, but you're not going to love it. Now, some mortgage executives will come back and say, well, I built in a tiered pricing, but it's never good enough, and tiers usually are not hit. You never actually reap the benefits of it, right? What you need is a vendor that's going to give you the best price from the beginning and not crush you if you exceed it. And that's what subscription-based pricing is at the end of the day. Is otherwise it's again, if you originate a loan, your cost is X. Originate 2 is 2X. Originate 100 is 100X. That is not scalable. And while it makes sense when times are slow, when times normalize, you're going to sit there and be like, gosh, why am I paying this vendor the same multiple? It shouldn't be, because technology is not scaling for you financially in that perspective.
Awesome. Great insights. Tim, we could continue to talk for a while. You always share so many good points. what's next for BeSmartee? What's next for Ask Bob? Where are some of the things that you guys are going to be rolling out to the industry that lenders will be excited, and I know I'll be excited that you guys are adding value.
Yeah, so we just wrote out the first thing we talked about was the Bright and Bright Connect
Right.
platforms at the ICE show in March 18th, about 30 days ago. So that was really the best of BeSmartee and some of our competitors all under one roof, right? So that's a consumer experience, mobile app, automation, all under one roof at a much lesser price point. So we expect to keep that to keep us busy over the next 12 to 18 months. But towards the end of this year, we're designing that customer for life strategy. So that'll be the new product line that we start working towards to help you with that retention, right? Because in about a year and a half, 2 years, we're going to be in a market where things will be stabilized. Well, now we'll have a pretty predictable rate environment. Transactions will flow back to normal. And then guess what's going to happen, right? Price pressures are going to happen again. Cost pressures are going to happen again. It's already happening now. It's going to persist. So you got to scale it. And then what's going to happen is like, wait, how can I lower my cost of acquisition? Right. So we're already thinking about that. That's the next kind of big thing for BeSmartee. It's a truly moving from transactional to home ownership. Now,
Fantastic. Yeah,
Bob,
tell me about Bob.
yeah, super excited about Bob. So Andrew Day Good. Look him up. Andrew Day Good. Ask Bob AI. Um, it's it's a help desk. Is really what it is at the end of the day. It'll help answer questions and allow your underwriters to review those questions, catch and release it, so to speak, before releasing it back out. It will reduce the cost of field and answer these questions about 80%. It's going to automate it. It'll have procedures and safeguards in place. But if I was talking to a lender the other day, they're not very big, but guess what? Now 12 people in their help desk. That's a lot of people in their help desk, and that's just what they can archive. There's questions over email, questions over phone calls, questions over inside the loan origination system under the Encompass loan notes, right? There's questions everywhere. So people are spending a lot of time and energy answering questions. AI can help you answer those questions, but do it in an enterprise way, right? Internally at your organization. I'm not proposing you send this to your consumers. This is an internal way for people to collaborate and dig through the years and years of documents and questions and tickets and answers, right? And Q&A, and turn that into an automated process so people can get back to doing their work rather than just answering questions all day. So that's where Bob's starting, and it will get deeper. But that's where we're starting. Again, let's start slow. Let's get the value that people are paying for. And then we start thinking about the cool stuff that come next year and the year after that.
Well, I love it. You always have a wealth of knowledge and expertise. Tim, thank you so much for being a guest on this episode of the Fintech Hunting Podcast.
Thank you, Michael.